Hey Rajendran, hi.
Hi sir. Hi sir. Good evening, sir.
Congratulations.
Thank you, sir. Thank you, sir.
When are you joining?
No, sir. I didn't get any information about that, about joining date or salary, whatever. I just got the information that I got selected in the company.
Okay, and it will be based out of Chennai.
Yes, sir. Hopefully, Chennai. That is what the associate director told me.
But it will be remote working or how?
No, sir. It is an outskirts, but I feel they'll be giving work from home opportunity for me. They asked me if I have Wi-Fi connection and personal laptop.
Yeah. And what
Uh,
will be your profile exactly? What will you be doing?
Sir, basically, I'll be dealing with financial models only. I'll be, updating the earnings, creating financial models. That is what they actually told me.
And this will be financial modeling of India-based companies or outside India?
That I'm not sure, sir. As of now, they didn't tell about that. But I guess it will be outside, not India.
Okay. Okay. Anyways, whether it's outside or in India, it doesn't.
Yes, sir. Yes.
Okay. Good. Hey Mruga, hi. Y'all both are praised. Y'all are happy, I hope.
Good evening, sir.
Good evening, Alan. How are you?
Hi, Rajendran.
आप तो
Good evening, sir.
RJ
Good
लगते
evening,
हो
sir.
मतलब whenever I see you, I feel that you are in I think you are an RJ, you are on a radio.
हाँ ऐसे ही मतलब अभी क्या
इतना
करें
बड़ा माइक है आपके सामने.
अभी वो हमने सोशल मीडिया के इतने काम करवाते रहते हैं हमारे एक इंटर्न
Correct.
बोलता है ऐसे करो वैसे करो ऐसे करो वैसे करो.
Nice.
Rajendran, congratulations.
Thank you, sir.
Also congratulations by the way for getting rid of the old company actually.
Oh, as in they have still not put it on mail, so
Asha,
I will work till 10th, and
No,
if
where were
they
you
don't,
working earlier, Mruga?
I'm currently working in a CA firm, mid-size CA firm, and
अच्छा.
right now it being a peak audit period, they are harassing me a lot.
Yeah, I know. September is always an audit period.
Yeah.
so CA is harassing on me, no?
I'm more than happy to get rid of it.
No, it's okay. I think it's just that I think this clauses which you were being held for, right? It happens with everyone, and it's not just you.
Correct.
So see, whatever they have been subjecting me to is unfair. That is what I know.
It's
And
okay.
fortunately, there is one employee who is really nice. So he guided me throughout.
Okay.
When do you go and speak?
Okay.
What day you go and speak?
Okay.
Mhm.
Maybe I think it's at the end. I think it will be over. There's always hope.
Hello, great. Good part is that you'll both would be starting your career soon with good brand names.
Yeah.
Yeah.
Just that one thing, and Alan will agree with me. See, intent should definitely be there, hunger to learn, and just be very honest to yourself.
Correct. Absolutely.
Just be very honest. Don't think money at all. Just don't think 5 years you will be making money. Just don't
I know.
think. Okay. And yeah. Okay. So just hold on for a minute. I'm on 1 minute. So okay, now I believe we can start. So Rajendra, you want to go first, or Muga, you want to go first?
I'll go, sir.
Anything.
Rajendran, have you updated the prices as on 3rd, or is it still as per 20?
No. It is as on 27th August.
So you have missed the bus. We are already 1 week ahead now. So what is the point now? I told you to update the prices, right? So your stock view might
Oh.
change because prices already moved 2% up.
Okay.
Always ensure whenever you're presenting anything about the company, it has to be as per the recent prices. But that's
Sure,
okay.
sir.
I can do that. In
Sure,
case, what
sir.
I would do is, Mruga can start with the presentation. You have 15
Okay.
minutes. If you can update the prices, well and good. Otherwise, it's okay.
Sure, sir.
You have 15 minutes. Just assume that you are in your company corporate culture.
Sure.
You will, as it is, have 5-10 minutes only for all these activities. And
Okay, sir. Okay, sure.
All right.
You
So
have
I'll
15
switch
minutes.
off my camera. So I'll just
Yeah.
watch.
Sure. Mruga, you can start. You can project your screen. I believe other people are joining it, but they'll let them join. You can start with your persistent, and just everyone from the June batch. We have Mruga and Rajendran from this batch who will be presenting on persistent systems. They have been very, very proactive and both are placed at very good entities now. Rajendran just got placed in CRISIL, I believe. Alan has already put out an message on the WhatsApp group. And Burga is also placed, I don't know which company you're there in, Burga?
ADP.
ADP, yeah. So the intent to get you guys in this kind of a presentation, because last lecture, this is the thing which is expected out of you as well. In fact, this batch had some 8 students because these are the only 2 students which were showing intent. So we are having this kind of a session for them as an extra session. And whoever among you all will have that intent, we are happy to give an extra session for you also. But it has to be an intent, it has to be focus, and you should come to me. Okay, I am interested in presentation. Simple. Okay. So Mruga, you can start. I'm also putting my video off because we don't want any interruptions. You have 15-20 minutes. Just start with that.
I request.
Okay, I'll give you the co-host. Make co-host. Okay. Go ahead. I'm done.
Good evening, everybody. I am Ruga Gadkari. I am a chartered accountant by profession. Today, I will be presenting my valuation model of Persistent Systems Limited, which is a listed company, listed both on BSE and NSE, and yeah. So the content of the presentation is going to be like, first I will be telling you about the industry overview, the industry to which the company belongs. Then I will introduce the company to you. After that, I will be showing you a summary of the financial statement of the company. Then we'll go through some financial charts and valuation charts. Then we'll move on to the main part, like the stock valuation. Towards the end, I will be presenting the price comparison across the industry and with some of the competitors of persistent systems, and the valuation comparison as well. So yeah, so persistent system is basically a software company and it belongs to the IT industry, which accounted for 8% of India's GDP in 2020. In the current financial year onwards, it is expected that exports from Indian IT industry is expected to increase by 1.9%. And the IT spendings in India is also estimated to reach 93 billion USD. So looking at both these aspects, we can say that Persistent has a good growth opportunity, as majority of its revenues are getting generated from exports. Also, continuing further, in budget 2021, the government has allocated a total of 53,000 crores to the IT sector. So this is again a good indication for the IT industry as a whole. Currently, the IT industry is placed second in terms of FDI flows, as per the Department of Promotion of Industry and Internal Trade.
Mruga, one thing, one minute.
Yeah.
Whenever you present a data, please put a source.
Okay.
Suppose you're mentioning anything, this is there, and you don't need to read whatever you have written. You don't need to read. You need to present.
Okay.
Okay.
Yeah.
It's not that you need to read that, and you need to be presenting, because see, these are general public information which you need to present, and always put a source. Okay. Okay. Go ahead. Yeah.
Now I will introduce the company itself. It was incorporated on 16th May 1990. It has turned out to be a market leader in digital engineering and enterprise modernization. It has presence across 3 regions, predominantly North America, which accounts for approximately 80 to 90% of the revenue, and second is Europe, and third is India, and the last is the rest of the world. In terms of client, I just have mentioned a few industries over here, but overall it covers all the other sectors as well. So majorly it caters to banking and financial services, then healthcare and life sciences, and software industry as well.
What is the contribution of BFSI?
BFSI contributions are, so I don't remember the exact number, but I just remember that it's the maximum of all.
Okay, okay. Go ahead.
If you see the shareholding pattern, the majority of the shares are held by institutional investors like banks, mutual funds, and pension funds, hedge funds, venture capital fund, accounting for 48, almost 49%, followed by a promoter holding of 31%, which is, according to me, it comes under the bracket of 75% limit set by the SEBI. So we can safely say from insider trading point of view, the company is a very stable company.
Buka, one comment. BFSI is not the largest contributor, just for you.
Okay.
Okay. So be very, very sure with the numbers. Okay.
Okay.
Just ensure that. And everything, all the numbers should be right aligned. It is left aligned here.
Okay.
Okay. Okay, go ahead.
Yeah. I have presented a small summary of the financials over here. So if we look at the Q1 of FY 2022, the company has outperformed its annual performance of 2021. But when I estimated the FY 2022 figures, I have kept the figures within between the range of 2021 and Q1 of 2022. So if we can just quickly go through, the EBITDA margin is 16.4% for Q1, and I have estimated it to be 16.7% by the year end. The PAT margin at the same time, I have estimated it to be 11.9%, which is almost, you can say, equal to the Q1 performance, recent quarter's performance.
So, Muruga, if I may just ask some questions.
Yeah.
That you say that EBITDA margin that you have estimated to be about 16.7. Can you please explain the basis for that assumption?
Okay. So when I went through the transcripts, the company has said that they are going to maintain the EBITDA margins at 2021 levels, but with a slight increase in it. So that's why I've shown a little bit of increase in the EBITDA margin.
Okay, so there seems to be some improvement of from about 0.4%. Any particular reason why EBITDA margins are expected to increase?
So one of the reason is that the company is expecting good performance in terms of the alliance that they have with IBM, and so yeah, for that reason.
Okay, the alliance business you're talking about.
Yeah.
Okay. Great, thank you.
So next, this is a chart comparing the revenue, EBITDA, and PAT. So if you if we see very closely, the EBITDA margins for FY22E and FY23E have been slightly increased as compared to the previous years. Simultaneously, the PAT has also been showing an increasing trend. As I mentioned earlier to Alan's question, The reason for the same is that the company is expecting good outcomes from the alliance business, and mainly from their alliance with IBM, which they have entered into in last year, I think. I'm not sure which year, but yeah. This chart shows the revenue mix. GDC is basically the global delivery centers, that is the offshore revenue generated by the company, and then India and the IP led.
GDC is on site. On site means my employees is there on the site. So GDC, given that it's outside, it is called on site, and India is called offshore.
Okay.
Okay, ठीक है. Good.
Yeah. So as the budgets are also in favor of the IT industry for FY 2022E and FY 23E, we can see that the revenue generated from expected to be generated from India is increasing more than the revenue that will be generated from the GDC centers. And IP led has been like increasing, but majority of the revenue will be generated from India and the GDCs. Next, we come to the core valuation ratios comparison, return on equity and return on capital employed. So as we can see that for 2022E and 23E, both the parameters have been increasing, and mainly the company has been very confident about their ratios increasing.
Mruga, if I may probably throw a little bit of questions out here.
Yeah.
If you don't mind answering, is if we see the FY21 performance, our ROC and ROE is about 16 and 18 respectively, right?
Yeah.
So what exactly, if you may talk in terms of business, what is the improvement which is leading to this, increase in the return ratios?
I will have to like go back and read the transcripts again.
No, Mruga. Transcript is not an indicator for FY22 because FY22 and 23 are your estimates. Transcripts, what you have read, is just a management commentary what they have given. Now, Alan is asking a very simple question, which anyone would ask. What is leading to this whole ROE increasing trend, ROE and ROC increasing trend? See, the reason why these questions are asked because you may be asked these questions by maybe the investors, which Alan is also asking.
Okay. So mainly, according to me, the company is planning to invest in hiring freshers more, and even the projects that the company is expecting, it's because of that.
Okay, so I'll try to simplify the question further in terms of probably the income statement itself, right?
Mm-hmm.
So would you say that if I talk about the EBITDA margins of the future estimated EBITDA margins,
Yeah.
in your model or in your analysis, do you see the EBITDA margins improving beyond a level which is leading to this ROC, or is it some other income factors which are probably contributing to the increase in the ROC?
According to me, I think it's because of the EBITDA margins.
All right. So EBITDA margin, I think, suppose it's just increasing by about 0.4%, right?
Yeah.
Okay. Go ahead. Yeah.
This is the beta band. So
Not the beta, P band.
PE band. Yeah. So basically, with the help of PE band, we estimate the target price. Now, PE band is nothing but a historical. So we have calculated the PEs for historical data, and taking that as the base, we have arrived at the target price of 3,700, and in the bear case it's 2,800. So comparing it with the current prices, we see an upside of 9%. At the same time, we see a downside of 19%.
So this target EPS is for which year, Muga? FY
This-
22, 23
This target EPS is for FY23E.
is not visible on the slide.
Okay.
And on what basis have you arrived at a multiple of 34 times?
So when we actually calculated the PEs for to date, the highest PE was 36. So I mean, it can be seen in the graph as well that the graph is going a little beyond 35. So just on an estimated basis, I've kept it at 34.
But do you think that we may see that kind of an upside further from the stock? Because if I see the downside risk is more than the upside, and the stock has shown a book movement.
Mhm.
So do you think that the stock will continue to see the same movement this year as well? Because it's already grown. I think next slide it's already grown a YTD of more than some 100%, right? Something
Yeah.
doubled. So what is your call? I mean, is it a good buy, bad buy, or I mean cautious? Okay, next slides you may speak.
I can say that it's a cautious buy
Okay.
because, as you already mentioned, in the succeeding slides, we will see that the relative comparison with the Sensex and the competitors as well. When we also when we
You can go to that slide so that we can see that. Yeah. This is the beta band. This is DCF. Where is that? Achha, peer comparison.
yeah, so like you also said, the YTD figure is already crossing 100. So according to me, it should be a cautious buy,
Okay.
keeping the market sentiments also into consideration.
Mruga, what would be the comparable P's of similar sized companies if you have anything in your mind? I mean, just at the back of your mind.
So I have calculated the comparable PEs over here for TCS, Infosys, and Tech Mahindra.
Okay. These are, I mean, what is the source of this data? I mean, is it routers?
No, for persistent, I have taken it based my model and the annual report, recent annual report of FY21. For the other companies as well, I've considered the recent annual report. And I have
estimated P's?
No. Estimated, Alan, we have just taken a brief number without
okay.
taking into annual, just for a thing.
All right. Got
Rather
it.
than taking an analyst number, we have taken, but it could be a little bit higher also. So just cut.
Yeah.
I think beta band, you were there, right, Muga, on the top?
Yeah.
I think we jumped.
This is the beta band graph. Beta band, again, like PE band, we calculated the betas for historical data till yesterday, and since we can see that the average is 0.45 and the max is 0.68. In the next slide, for the calculation of weighted average cost, I have considered the beta to be 0.5. I've forgotten to mention it over here. But yes, for the weighted average cost of capital, I've considered the beta to be 0.5 just to be in this range. Next, we come to the DCF analysis. So the cost of equity is calculated using the CAPM formula. And cost of debt is obviously the debt interest rate minus the tax rates. I have taken the terminal growth rate to be 6%, and based on that, the target price as per the DCF analysis is coming to be 3,600. And here I've below I've shown a sensitivity analysis for the stock, assuming the terminal growth rates to increase by 1% and decrease by 1%. At the same time, the VACC to increase by 1% and decrease by 1% again.
Muruga, what is the basis of taking 6% terminal growth rate?
So if you see right now, the world growth rate is 5% for the last financial year. On conservative basis, I have increased the growth at 1%. That's why I've taken it to be 6%.
All right.
Mruga, see, this is if your reward could also be, if you see the CAGR, revenue CAGR, which has been in the past and which is expected in the future, it is by far over 25%.
Okay.
So which is providing you, which is, so the statement should be, we have estimated a strong CAGR, or this is the company is expected to grow at a strong CAGR of 25% plus, which is giving us confidence to take a terminal growth of 6%. However, given that this we have taken, or we have also shown the sensitivity analysis. And even if we were to consider a terminal growth of 4%, we are getting a target of some 2,500, which is equivalent to our bear case number, what you have projected.
Okay.
So there is, see, in the stock market, it's very important. People wants to know the downside risk more than the upside potential. कि मैं अभी डालूंगा तो what is my downside risk? I know it's good, but how much I may lose if I put the money now? Would I put all my money 100 rupees at this price, or should you want me to accumulate?
Okay.
Like suppose you're saying, okay, I have a cautious approach, no problem. Then your recommend would be, while we have a cautious approach, we are positive on the stock with a long-term view, and we recommend stock accumulation between 3,200 and 3,000 levels for a better upside.
Okay.
Because see, there will definitely be a downside. Abhi we are in a market where it is index is 58,000 and this stock is already outperformed. So there is a very strong likelihood that it may underperform. But whenever you're doing fundamental analysis, you are positive on the long term. You can't take a call on the short term, which is your trading call. But if suppose there is a downside risk, you are saying you buy more and you accumulate the stock. That should be the thing. And when you're also putting a P multiple, what you're saying 34, you could have used that PEG ratio component, which is already giving you a PEG of someone or something is there, right?
Yeah.
That you could have justified that because your EPS CAGR is more than 37-38%, which is able to justify that why we are taking a PE of 34. In fact, it could have a higher potential PE multiple re-rating because that has been the case in the past.
Okay.
So all these questions which Alan has are very, very pointed and relevant question which everyone would ask. Obviously, you will experience it more when you are actually in front of the investors, but we are just trying to put you in some kind of soup so that you understand all these things. Okay. Next.
So based on the PE band and DCF analysis, we expect the target price of Persistent to be in the range of 3,700 to 3,600 and
Rupees किधर डालोगे madam? Is it dollar, rupees, euro?
yeah, it's rupees.
So in the range of 3,700, which is based on the FY13 EPS of so and so and our target multiple of so and so.
Okay.
ये कौन डालेगा? Secondly, looking at the stock current market price and current, we suggest a buy with a long-term perspective. However, whatever I told you, you should justify. लोगों को convince अच्छा, she is positive, but she is cautious also because when I asked you, okay, how do you like? You're saying I'm cautious, but these statements does not look that you're cautious.
Okay.
Okay.
Yeah, I get it.
No problem.
Okay.
Are you done or you have anything else?
Actually, I'm done because price comparison and valuation comparison
Correct.
were already covered.
Okay, good. Anyone has any question? Alan, any question?
No, I think probably I just have one recommendation instead. Is
Yeah.
that the questions which I asked you, right?
Hmm.
I'm not very asking you from an analyst perspective. For example, if I was interested in investing this stock, I would try to look at it from a very business angle. So possibly, Muruga, what you can do is, as we progress even further,
Hmm.
try to look at it or try to at least answer it from a very business angle rather than the technical angle, because nobody understands technical, right?
Okay.
Yeah.
Yeah.
But otherwise, a fantastic presentation.
Thank you.
Good. Very good, Muga. Very happy. Good.
I actually wanted to combine one more thing. This EV upon EBITDA multiple. So right now we can see that according to the when compared to the industry average, persistent is shown. I mean,
Ma'am, there is some problem. Tech Mahindra can't be at an EV EBITDA 1.5. It has to be a higher number for sure.
okay,
There is some problem
okay,
because it's a huge differential, right? If you see PE is at 24, EV EBITDA can't be at 1.5 here.
okay,
इसका मतलब I am just giving the valuation to Tech Mahindra, which is just 1.5 times my EBITDA, which is next to impossible. But anyways, considering that वो average ही आपका अभी बैठेगा नहीं, क्योंकि average कम हो जाएगा आपका, because 2 is not the right number, I think so, for Tech Mahindra.
okay. Yeah. So that's it.
Okay, good. Very nice. Good. Rajendran, you want to go next?
Sure, sir.
Have you updated the prices as per yesterday?
Yes, sir. Yes, sir.
Haven't.
Yes, sir. I have done. I have done.
Always remember, whenever you're presenting, it has to be as per the latest price.
Sure, sure, sir. Sure, sir.
Okay, chalo, good start.
So permission to share screen.
Oh, sorry, my mistake. Me co-host.
Okay. Okay. So guys, let's have a presentation on persistent systems. So these are roughly the points to discuss. We'll discuss it. So this is the industry overview. Over the past 30 years, one sector that has contributed immensely to India's growth is your IT sector. It has created top quality jobs, and it has raised the living standards of people. So it has contributed around 7.7% to the country's GDP and is expected to contribute to 10% by 2025. United States accounts for 2/3 of India's IT exports, and the digital revolution has just started. Digital technologies like cloud computing, IoT, big data, machine learning, advanced analytics, all these will continue to grow, and it will create immense growth opportunities in future. So these are the top IT companies in India with respect to market cap: TCS, Infosys, Wipro, Tech Mahindra. The company has, they have a global presence across different verticals like banking, financial services, and insurance, healthcare and life sciences, telecom and retail. This is the road ahead. Basically, there are a few factors that actually would drive its growth, like cost advantage. In India, they are available at a less expensive rate compared to US. We have a strong leadership for about 30 odd years. There is growing demand for technology solutions. We have a skilled workforce. So industry is expected to grow to US 350 billion by 2025. So
Same
this
comment,
is
Rajendran, source, very, very important. Okay. You should always put a source when you're putting.
source. Okay, sir. Okay.
No,
Sure,
sir.
sir.
Go ahead.
Sure. So this is a brief introduction about Persistent Systems. It's a trusted global services and solution company, founded in 1990. It brings 30 years of expertise across sectors. It has a global presence in 17 countries like India, Australia, Canada, etc. It works in partnership with Amazon Web Services, IBM, Salesforce. It has acquired over 14 entities. And these are the services that the persistent systems is offering. 6 types of services. This is the industry. Just to give you a small brief, the market cap is in rupees million 248,687, and enterprise value is 2,33,485 rupee million. It has around 13,500 plus employees as of now, and this is reported in Indian currency. The other part, this base case, bear case, I'll be discussing it in later slides. So just hold on. So this is the shareholding pattern, the contribution of your promoters, FIIs, foreign investors, DIIs, public, others, what Anand Deshpande, Suresh Deshpande, investment funds have, put in. So these are the financials of Persistent Systems Limited. So how your revenue has grown over a period of time, what is your EBITDA margins, PAT, like these are the main financials that you'll look at when it comes to a P&L sheet. And when it comes to a balance sheet, you'll mainly focus on what is the net worth of the company, what is the total debt, total cash, what is the gross fixed assets, whether your gross fixed assets is increasing over a period of time, like whether the company is reinvesting in your gross fixed assets. So these are few parameters that you'll have to look a quick, screen of the company financials.
Rajendra never ever used a copy paste image of Excel sheet. When you're putting
Okay.
a table,
Huh.
it does not look good in the presentation.
Fine, sir. Noted. Sure. So this is a very important chart. Revenue versus EBITDA versus PAT. Basically, like how much revenue the company has generated over these 5 odd years, and this is the margin, 16.5% in year 2009. You have the parameters as such. Um, this is the revenue mix. What is the contribution by your global delivery centers? What is the contribution by India? What is the contribution by intellectual property, let's testing services, etc. Like this one thing, since you all are there, you can also represent it in thousands. So in that case, just put a 000 out here, so that you can express it in 8.3. Since this number is small, I just put it as such. Basically, you can also call this as onshore and offshore. Your GDC will be onshore and your India will be the offshore revenue part. So this is the revenue mix across industries, across banking, financial services, and insurance, healthcare and life sciences, and the software, high tech, and emerging industries. So you could see the major contribution out here is from the software, high tech, and emerging industries. This is the revenue mix across geography for the year 2019, 20, and 21. North America, Europe, India, and ROW means rest of the world. These are non-major markets. Your India, Europe, and North America are major markets. Have a note. Then this is other things. So this is the basic, like a chart similar to that of revenue mix. These are the return ratios. What is the returns that the company has generated? That is ROCE and ROE. Over a period of time. Since the margins are very good, we can say that the company has a robust business model capable of generating sufficient revenue in futures as well. One thing, since juniors are there, I would say just have a note on what are the differences between ROE and ROC. When you actually look at ROE and ROC, okay, now just get to know the differences. Like for example, ROC will be used in debt intensive sectors. You need to know the basic differences. Your ROE will is just the profit that has been generated, the profits that you generate from the capital employed, how efficiently you have used capital to generate additional profits. Then this is the PE band. So it band charts, basically it shows you the upper limits, the lower limits. So when it comes to PE band, we get to know what is the price earnings ratio over a period of time. These are the multiples. So we have two cases, base case and bear case. If you see the EPS growth for the future, for the next year, is expected to be around 39%. Okay. So since EPS growth is expected to be around 39%, I have assumed a target multiple of 34 as like for base case. Okay. So when I arrive at a target multiple of 34, I am getting a target price of 3. You all know there is this PE ratio. I'm just reversing the same formula. So that is how I'm getting this target price of 3828. This is the current market price. So your current market price is 32. I mean, as of as of now, it's 3441. I've just updated in the model. If sir permits, I'll show you a model. So the upside potential out here is I have assumed an EPS growth of 20%. Okay. So since it's bear case, so for this target multiple of 28, I have arrived at the target price of 2795. My current market price is so and so. So there's a downside potential of 14%. Basically, if I have to say about this particular stock, it will be like the persistent systems. If you note, it has grown enormously over the last 1 year. But I personally feel like it won't continue to grow the same way in the same trend or pattern. So I feel it is better to invest in a stock like Infosys, since it's a large cap company, very reliable, and the price is also less. It's around 1,800 odd. So I think that is a better option for me. So this is just my stock view. So this is what I explained just now. You can go through these things, like roughly whatever I have explained.
Rajendra,
This
sorry,
is the beta
Rajendra,
band.
just go to
Basically,
that.
beta, when I say
Rajendra,
it is a.
just go to the previous
Yes, sir.
slide, please. Just go to the previous slide.
Yes, sir. Yes, sir. One second.
No, after this.
Okay.
The slide where you are showing your
stock view.
See, whenever you write anything, it is not I, it is always we. So I have considered, we have considered a target. It's always we, not I.
Sure, sir. Since I am only presenting.
No.
Agreed, sir. Agreed. Okay.
We means when you are representing, you will be making something. It's always we. You have to denote it. Number one. While
Okay, sir, noted,
your
sure.
call is that we are not very bullish on persistent, and you would recommend to buy Infosys. What have you shown of Infosys? You recommend a switch from persistent to Infosys. Why are you so confident? Why not on TCS or maybe some other company?
No, actually, the returns generated. Am I audible? Okay.
Yeah.
So the returns generated by TCS over the past few years is a bit less compared to Infosys. I have this price comparison. If you permit, later I'll show the model as well, that particular part. So with that, I'm actually saying it is better to invest in a large cap company like Infosys rather than saying TCS.
What you could
because
have
the
done,
returns that company has particularly generated.
You could have done a P band comparison of persistent versus Infosys just to validate your thought. Okay. Now, say for example, the P band differential, the P differential between persistent and Infosys. Suppose 20% example. Now it has gone to 40%. So we are saying that while persistence is not likely to grow at that rate, or it is go, but there is still room for a lot of growth in Infosys. Assuming that there is obviously not some triggers on the promoter chain. See, you need to justify when you're making a large statement. The statement could be why Infosys? What have you shown of Infosys? Just to give you an example. Okay. And it is not, I am not sure if the stock price will increase in the same trend. ये सब statement मत मारो. मतलब ये सब इतना बहुत obvious statement है that, because see, the thing is, you are getting an upside. What is your view on the stock? Your stock in the view is sell, buy, or don't buy, or don't do anything. What exactly is your view? That has to come out very explicitly. Okay.
Okay, sir. Noted. Sure.
Okay.
So sure.
And next year, 39% is CAGR 39%.
No, CAGR is 38.9% to be
always
very
mention
precise.
CAGR because you are factoring in FY13.
Okay.
Sorry, FY23. FY22 you are not factoring in for your calculation. And always is good to have your CAGR growth, not the year-on-year growth. For future, that we are estimating a CAGR of so and so, whatever, for over 21 and 23. Okay, go ahead. Yeah.
Sure, sir. Okay, so guys, this is the beta band. Beta basically is the sensitivity of that particular stock with respect to the benchmark, that is Sensex out here. Beta, like, just go through the formula. It is the covariance of stock market return and the stock returns and the market returns to that of variance of the market returns. So that is how you get the beta value. Average, like we have taken the beta value of persistent systems out here. and with respect to Sensex, and we have got the minimum, average, and maximum value. So this is how the lower boundaries, upper boundaries are stated as such in this chart. Then there comes the DCF valuation. Basically, DCF, as the name implies, it is discounted cash flow analysis. Basically, you're discounting your future cash inflows and cash outflows with a particular discount rate. Out here, we have discounted with this weighted average cost of capital. Okay. So it's proportional. It is a proportional weight of both capital and debt and equity. So here is the free cash flow. So you'll be taking the present value of free cash flow. Ignore this PV of FCF twice. I just calculated manually and then I used the PV formula. In Excel. Then comes the terminal value. Basically, the company after a particular period of time, it is expected to grow at a constant rate. Okay. So you will have to calculate the terminal value and then you'll have to discount it to the present value with the particular discount rate. So if you add the present value of free cash flow and the present value of terminal value, you will get the enterprise value. We all know the calculation of enterprise value. So again, reverse calculation, you will arrive at the market cap. Then we have the shares outstanding. So that is how you arrive at the target price. Okay. Okay. 1 second. Maybe I missed out on something. Fine. Weighted average cost of capital. I believe you all know the calculation. It is just cost of debt into weight of debt plus cost of equity into weight of equity. When I say debt, the interest part in the debt is tax deductible. So account for that as well. So that is how you actually calculate the weighted average cost of capital.
DCF का session नहीं है.
Sure, sir. Price comparison. So this is the price comparison. Again, I have updated everything in the model. This is just a PPT.
You go to the model only, Rajendran. Okay, that's good.
Okay. Just
as it is, I wanted everyone to see the model.
Okay, sure.
You can just project the model.
Fine. This is the model. So
go to the first page. Go to the first slide also.
When it comes to
Rajendran, go to the first slide, which is a summary.
Okay, sure. This is the summary sheet of persistent systems. Basically, the company description, information, what is the base case, bear case, target price, what are the services that the company is offering, key ratios, key financials, and these are few charts. So this is basically the summary sheet of persistent systems. Next comes the model. Basically, when it comes to research, you'll have to get the data from the company's website. You'll have to download annual reports and quarterly reports from the company's website. In this case, it's persistent systems.
Mention it,
so
company
that is how you'll be
annual report
getting
only.
the data and putting it out here.
Rajendran, mention company annual report only. If I find anyone downloading anything from Money Control,
no, sir. I have downloaded
everything has to be from annual report and show the comment. What have you taken where? Please show it. I want everyone to see.
Sure, sir.
Go to model. Go to model.
Okay.
Go to model. Go to PNL.
Okay, guys. So
I want everyone
this
of
is
you
the,
to put FY20 from which page. Mind you, everyone has to put this. If I don't see this comment, आपको कुछ ना कुछ तो मैं लिखवाऊंगा 1000 times. Okay, go ahead, Rajan.
Yeah. Okay, guys, this is just for understanding purpose. Okay, so this is the valuation. The current market price is 3,441. These are the basic ratio that you'll have to look at, especially the PE ratio and EV by EBITDA ratio. Again, get to know the differences between these two. These two are widely used ratios, valuation ratios. Then there comes the quarterly and the operating matrix. Operating matrix, when I say you have this
wait, Rajendran. In quarterly also, when you're putting the numbers, go to quarterly. In quarterly
yes,
numbers also, when you're putting the numbers, I want a comment. Which quarter have you put in the numbers? And Rajendran, I also want you to show them the folders, what they need to prepare while downloading, but you can finish this model.
Okay, Rajendran, one question, and I will be, I'll just ask one question, since you started with a statement stating on the fact that probably, persistent is not, you would not personally, you're not in favor of the stock, right?
Yes, sir.
Okay. So my question is,
yes,
in the
sir.
entire IT industry, if you are saying that probably Persistent is not something that you would be interested on, and probably Infosys probably something better, then could you please just probably in one statement, if you talk about in the entire IT industry in India, do you see any unique companies doing probably some unique work which has your attention, which probably you would be interested in analyzing? Because what is the business model difference between Persistent and Infosys?
Okay, sir, like I have an eye on two small cap companies. Like one is Happiest Mind Technologies, and the other one is Newgen, I guess. Newgen Software, Newgen, I guess. Yes.
Yeah.
Okay, so they are concentrating on the so and so digital technologies that I mentioned earlier, like IoT, big data, machine learning, advanced analytics. So they are actually concentrating on that. So those are two stocks to look out for in future. In fact, Happiest Minds, the stock price has risen enormously in the last 1 year.
What is the uniqueness of the business model compared to, let's say, an Infosys or a Persistent? Is it still body shopping? That what they do?
No, sir. I believe they are focusing on these digital technologies more compared to TCS, Infosys. But when but you can't actually compare them because Infosys, TCS, they have a strong management. They are in for several years. So if you have to invest in these stocks, then large cap stocks are more reliable. You have the experience. There are many analysts following those particular companies. So I think you are assured. And when you invest in such companies, you need not think them, more often than not. Whereas in case of Happiest Minds and Newgen, you will have to. It will just disturb you, please.
Okay, so I didn't really get convinced there, but still I would give you the benefit of doubt.
Okay. Okay, guys. So this is the financial results which sir, like Siddharth sir actually told. Basically, you have a folder like this. You'll be separating it year wise for year 2019 to 2022. And inside that, you'll be dividing it into quarter one, quarter two, quarter three, quarter four, and annual report 2019, whatever year it is. And in each of these quarters, you have these 4 sheets. Okay, an analyst call transcript wherein you will get to know what is the company expecting in future. Analyst presentation fact sheet where you'll get to know the revenue mix across industries, across geography. These are the consolidated financials quarterly. Okay, so these are few sheets that you'll have to download. These are very handy. And this is the annual report. Okay, so this is basically if you have these organized, then it will actually save time, okay, for you when you refer. Sir, can I go ahead?
Yeah, go ahead.
Okay. Okay, so this is the operating matrix. Again, this is taken from the analyst presentation call sheet. So you will get to know the revenue mix across industry, across geography, and these are particularly handy when it comes to preparing charts. Okay, I'll show you the charts later. Just hold on. This is the revenue model. So revenue model, this is year wise and this is quarter wise. So basically, you have you have bifurcated into employee breakup, revenue per billed person months, and billed person months. Okay, so you'll be multiplying this revenue per billed person months into billed person months to arrive at this particular revenue. Okay, just as you do in basic mathematics, unit price into volume. Okay, so this is how you arrive at the revenue model. And do note, do have a look at these assumptions that you take. Okay, you will have to give a sound logic, a sound reasoning for whatever assumptions that you take. These assumptions are based on your understanding of the company, of the business model, of the past historical performance, and what you expect from the company. So always, whenever you give these assumptions, do have a sound logic for each and every assumption. Okay. Okay. So this is the DCF. I explained you in the PPT as well. Okay, so this is the sensitivity analysis. So this is the analyst call transcript wherein you will get to know what is the performance of the company in the past quarter and what you expect from the company in future. Okay, for the next quarter, for the next year. These are the basic charts. Okay, slowly if I go, revenue versus PAT versus EBITDA, revenue mix, cost mix, ROE, ROC, basic charts that you would require. Okay, revenue concentration, top clients. Okay, and here comes the price comparison. Basically, you will be downloading data from the BSE historical information. You will be downloading the historical prices of persistent systems, TCS, Infosys, and Sensex. Okay, so this value as of now is taken up to 3rd September 2021, that is yesterday. And here is the price comparison. If you clearly note that the stock price of persistent systems has risen enormously. This blue color line is that of persistent systems. Okay, and this is the absolute returns that the company has generated and the relative returns. When I mean relative returns, it is just the returns that persistent has generated compared to its peers. Okay, so these are the absolute 3, 6, 12 months, and year to date is from January 1. Next is the valuation comparison. Okay, two main ratios to concentrate when it comes to valuation comparison is your PE ratio and EV by EBITDA ratio. These data you will be downloading from you will be getting from the annual reports of the companies, of the respective companies. And when I mean average, it is just you are comparing with the industry average. Here, since we have taken these 4 companies, so we have taken an average of these. Okay.
EV EBITDA, just go to Q6.
One second.
Rajan, how can EV EBITDA be 185?
Yeah.
was getting in single digit, you are getting in like 100 of digit.
Okay.
Tech
Okay.
Mahindra. I think there
Okay.
is some issue.
Okay, sir.
Just look at these numbers, both Mruga and, because it
Sure.
can't be 185 EV EBITDA.
Sure, sir. I'll
Okay,
have a look.
just look at it. Yeah.
Yes. So here comes the PE band. Okay. So again, PE band, you'll be learning this class. Basically, as I mentioned earlier, like how your PE ratio varies over a period of time. These are the gaps you'll be considering forward EPS. I have told you about the base case, bear case, and all. Okay, so have a look at these. And this is the final beta band. Okay, so this is the chart that I roughly prepared. Again, as I told, beta is the covariance divided by variance. Okay, and this is the chart that I prepared. So with this, the presentation is done. Thank you.
Okay, good.
Sure, sir.
Chalo, you all both have done very well, Rajendran and Mruga. I'm very, very happy with you.
Sure, sir.
So the batch of June, you all know what is the expectation out of you, right? So it's very, very important. And these are the 2 guys. And very openly, I think this batch, Rajendran, had what, 8, 10 students?
Yes, sir. Close to 10 students. Yes.
Close to 10 students. Whoever is showing an intent to learn, I'm there with him or her. Whoever is not showing an intent, I'm not interested. Correct, Rajendran?
Yes, sir. Yes, sir.
I'm very, very blunt about it. I am happy to help you outside, but provided you are happy to help yourself. Already I've given you a gyan already, which I'm repeatedly be giving you gyans. So Rajendran and Muruga, very happy for you. You have any glory because this is your last lecture probably. I hope you all had great fun in learning.
Yes,
and
sir,
I hope that whatever you have learned, it will help you during your corporate life.
Sure, sir.
Just ensure these are very, very requirement presentation. If you see everyone, the way they have presented in the model, you will not find anything which is going haywire, which obviously I will take your class now, 5 o'clock. Many students are presenting in such a manner कि उनका पूरा Excel उनका ही है, ऐसा नहीं होता है. But I'll come to it. Presentation is the key. Organization is the key. Organizing yourself is the key, so that you don't enter. Okay, I'm not put my video on. I'm so sorry. So that you don't make any mistakes coming out of it. So just ensure you all are actually doing things in the right manner, which is very, very important.
I would just like to add one piece of advice. I don't know, but when sir mentioned that he will make you write certain things for 1000 times and all, he actually does that. I mean, I have been learning under him I have been you can say I've learned it in a very hard way, but yeah, he did make me write certain things for 1000 times.
And Ruga can relate because I think she did a very silly mistake because she didn't organize herself and then she realized oh, I didn't organize, I made my blunder in my model. So it's very, very important. Keep yourself organized. These are very basic things. Like when you download these reports, why do you need dependencies on internet? You have to organize yourself, just like Rajendra shown you in the folder. And I will literally make everyone do it. If I don't see it, like Mruga said, 1,000, and that punishment will keep on going up and up. 10,000, whatever it is. Number. Okay, good. Rajendra, you want to say anything? Any closing remarks? Anything?
Not as such, sir. Say if I have to say something to the juniors, I'll just say one thing. Guys, you all are out here because you are wanting to pursue a career in finance. Okay. So if you are wanting to pursue a career in finance, then just give the amount of respect that it deserves. Okay. Just be sincere in your approach towards the course to Alan sir and Siddharth sir. Then rest things will follow. Huh? You will attain great heights. Sure.
Great. Okay, thank you so much, Rajendran. Thank you so much, Vaga. We are very happy for you. Really do well in your career. In case you feel anytime, obviously my number is there.
Sure,
If you feel anything, any doubt, please feel free to reach. Don't worry.
Sure,
Don't
sir,
hesitate.
sure.
I'm always there to help, provided
Sure.
you help yourself. I'm not here to now answer silly mistakes.
Sure,
Come out with a question which I can tell you I can will take a day or two. मुझे ये मत
Okay.
पूछना ईवी बिट्टा का फॉर्मूला क्या है प्लीज
Okay,
मैं बाद
okay.
में गुस्सा आ जाएगा मेरे को
Sure, sure, sir.
come out with a very logical thing which will help me also learn. I'm also here to learn from you guys, right? You all are
Yes, sir.
getting into an industry where there will be so much learnings. Ask me a question which will also acha, okay, let me, I don't know the answer, let me find out. Let's try to arrive at a problem, arrive at a solution to a problem which I am also not aware.
Sure,
That will
sure,
work.
sir. Sure,
Okay,
sure,
but
sir.
free to reach out. All the best. I really
Sure.
want you all to do well, and please
Thank
keep
you,
in
thank you,
touch.
sir.
I really want to see you all grow at a next level.
Sure,
Just
sure, sir.
implement the simple, small thing methods what I have taught you in class. It will really, really help you. in the
Okay,
future.
okay, sir. Sure.
Okay. Chalo,
Sure.
good.
Thank you.
Sure.
All the best.
Thank you, sir. Thank you, sir.
Acha,
Thank you so
Anirudh,
much.
there is another link, or we should continue with this link, or is
We
there
have
anything?
another link for
Another link, huh? Okay.
yeah.
Guys, everyone, please join that link. Okay. Thank you. Thank you so much. Thanks. Bye.